Ladies and gentlemen, good day and welcome to the Q1FY27 earnings call of Hind Rectifier Ltd. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note this conference is being recorded. I now hand the conference over to Mr. Suramya Nevetia, Chairman and Managing Director of Hind Rectifier Ltd. Thank you, and over to you, sir.
Good morning, everyone, and thank you for joining us for the Q1FY27 earnings call of Hind Rectifier Ltd. I am pleased to be joined by our newly appointed Executive Director and long-time CFO, Mr. A.K. Nemani, our new Global Chief Executive Officer, Mr. Anand Chidambaram, who I am delighted to welcome on his first earnings call with us, and our Chief Executive Officer, Mr. Manoj Nair, along with SGA, our IR advisors. Before I begin, a brief word on our leadership. Mr. Nemani, who has served the company for 34 years, has joined the board as an Executive Director while continuing as our CFO. Mr. Chidambaram, who joined us as the Chief Global Growth Officer, has now been appointed as our Global Chief Executive Officer. He is the one who spearheaded and achieved our recent breakthroughs internationally. And of course, Mr. Manoj Nair, our CEO, who continues to lead our India business, focusing on revenue growth, operational excellence, and cost control. Meanwhile, I, the Chairman and MD of Hind Rectifier, will continue to build a highly dynamic and sustainable vision for the company and continue to personally oversee our R&D roadmap, technology developments, M&A activities, and of course, engaging with you, our investor community. The structure reflects the company that we are building. Strong Indian technology backed by efficient operations, supporting growing global businesses with disciplined financial stewardship. The recent months have marked an important milestone for Hind Rectifier. Over the last few years, we have been steadily building capabilities across power electronics, traction systems, railway electronics, and advanced engineering. We are now seeing these capabilities come together in a much more meaningful way. Hind Rectifier is increasingly moving from being a supplier of individual components to becoming an integrated systems and solutions company. This transition is at the heart of our long-term strategy. It allows us to participate in a larger part of the value chain, increase the content we address in every locomotive and train set, build deeper technology capabilities, and then take these capabilities into new products, new customers, and new geographies. Let me now take you through the business segment by segment. First, Hind Rectifier business, orders, operations, and margins. We understand that Q1 order intake looks flattish. However, this quarter does not define the year that we have planned. We have participated in several tenders where we are at leadership positions, either L1, L2, or L3. These orders are expected to come in soon. Ordinarily, these finalizations would have come within Q1. There are multiple factors which have caused this delay. Primarily the global geopolitical environment, which has led to certain temporary pivots within the government. Furthermore, operationally, we are once again at a time where we face shortages in the electronic segment. We have not been severely affected by it yet, but the industry has, leading to lopsided inventory at customers' end. We overcame this challenge a few years ago, and we are certain we will mitigate this challenge once again if it poses a threat to us. On the copper front, by manufacturing these highly critical copper conductors in-house, we are improving control over an important input for our transform business, while also creating an opportunity to develop a separate business serving third-party customers and export markets. We see this kind of vertical integration as an important part of building a stronger and more competitive Hirect. It gives us great control over our supply chains, supports our core business, and at the same time creates opportunity for additional revenue streams. There is already an impact of the copper conductors. Had it not been for the copper division, our gross margins would have been adversely affected by about 2%. That means we have saved about 2% on the material cost. And this cost saving is in its infancy. We are adding more initiatives within the copper vertical to further improve margins substantially. Besides copper, there are a couple of other initiatives which are expected to be approved by the customers shortly, which will also contribute to improvement in margins in the next few quarters. These would be within the electronics segment. Second, Elventive France. Our investment in Elventive France is another important part of this transformation. Elventive's expertise in EMS, printed electronics, embedded systems, robotics, and industrial automation complements our existing power electronics capabilities and gives us a strong presence in Europe. As the business goes through this integration and scale-up phase, we are seeing some near-term impact on consolidated margins, as it was expected at the time of the acquisition. We expect this to continue over the next 3 to 5 quarters as we work towards break-even at Elventive. However, as the business scales, we expect this impact to gradually moderate and margins to improve. Over time, we believe this platform can help us accelerate new product development, enter new applications, and strengthen our global customer base. We are contemplating certain restructuring measures at Elventive France. The specific measures will be defined shortly. We are in concluding discussions with certain marquee German automakers, and we hope to close these leads positively. These are significant, large projects, and the restructuring will position us to execute such orders if successful. Third, Hirect Global. Another important development during the quarter has been the expansion of our business into international markets. We have secured our first order from the United States for traction motor assemblies, marking our initial entry into the US rail market. The order is scheduled for delivery within the year and provides us with a platform to develop customer relationships and pursue further opportunities in the region. We see this as an encouraging validation of our engineering and manufacturing capabilities. Our objective is not simply to export products, but to gradually build Hirect into a global engineering and power electronics company. The same technology platform is also opening opportunities beyond railways. We have also secured an order from the United States for IGBT converters for the mining industry. This is a big break and an important development because it demonstrates the applicability of our power electronics in a demanding industrial environment where reliability, robustness, and uninterrupted performance are critical. These are initial prototype orders, which will be executed this year ahead of schedule. And once installed, we expect repeat orders in bulk quantities. Fourth, new and emerging business, Memo and Vande Metro. This is the evidence of our evolution. Recently, we secured our first Memo train set development order from Modern Coach Factory, valued at approximately 60 crores, covering 4 train sets and an integrated propulsion system, including transformers, motors, propulsion systems, and TCMS. We also secured our first order from the very first tender of Vande Metro train sets. Let me repeat, this is not only Hirect's first order, but it is the very first tender for this specific train configuration. This covers the design, development, and commissioning of an integrated system comprising of the propulsion systems, transformers, motors, TCMS, and other electronic equipment. What is particularly important for us is the significant increase in the value we can address per railway platform as we move from locomotives to train sets and next-generation mobility applications. Today, our content opportunity on the locomotive is around 5.5 crores. With our entry into train sets, this opportunity increases to around 15 crore per memo train set, while platforms such as Vande Metro offer an opportunity of around 60 crores per train set. Our addressable content per platform increases by roughly 3 to 12 times. We are no longer participating through a single component. We are bringing multiple technologies together and delivering them as an integrated railway system. These projects provide us with an important opportunity to demonstrate the reliability and performance of our indigenous propulsion technology in a train set application and strengthen our credentials for larger system-level opportunities going forward. These two orders are proof points that the technology roadmap we have been building for years is now beginning to translate into system-level opportunities. Fifth, the propulsion system update. At the center of this transition, the main protagonist is our indigenous propulsion platform. Our field trial program is progressing well, and we have covered about 9,000 to 10,000 kilometers of the field trial. It's no secret the program experienced several delays, most recently due to the flooding in certain parts of Gujarat. We expect the trials to progress towards completion in the next few months. However, as per the new UVAM guidelines, we are now approved as a development source and will be eligible for 20% of tendered quantities. For us, propulsion system is not simply another product in our portfolio. It's a platform around which we can build a much broader systems and solutions business by combining our transformers, motors, converters, control electronics, and other railway technologies. Our long-standing experience in rail power has provided us with the foundation to make this transition. As we look ahead, our focus remains very clear. We will continue to strengthen our core railway business while increasing our participation in higher value products and systems. We will continue to scale our traction transformers, propulsion systems, railway electronics, and other technology-led businesses. We will build on our entry into next-generation train sets, while also taking our power electronics capabilities into international and adjacent industrial markets. We believe this transformation provides the right platform for us to pursue our long-term growth ambition. The foundation has been laid, the technology platforms are taking shape, and we are now seeing early evidence of our ability to address larger and more complex opportunities. We will continue to evaluate opportunities in areas such as mining, defense, marine, power management, and other specialized industrial applications, and emerging tech sectors like AI and data centers, where our engineering and power electronics capabilities can create a differentiated solutions. These adjacent applications are an important part of our broader strategy to diversify beyond our traditional markets. These quarters of flat order intake do not deter us from our vision. Our target for the year of achieving 30% growth stays intact, and the year so far has only strengthened our ambition. The ambition of becoming a $1 billion revenue company in the next 5 years now moves a few steps forward that we have received proof of concept. With that, I would like to hand over to our CEO, Mr. Manoj Nair, for his remarks. Thank you.
Thank you, Suramya. I would like to take a few minutes to talk about what, in my view, is the most important foundation behind HYREC's next phase of growth, our engineering and technology capabilities. At HYREC, we have always believed that sustainable growth in the railway business has to be built on strong engineering. Over the years, we have moved from individual power electronic products towards increasingly complex railway systems, and we are now strengthening this capability further through our investments in people, R&D, and product development. Today, we have more than 200 engineers across our R&D centers in Mumbai and Hyderabad, with the Mumbai center focused on our core technology development and Hyderabad strengthening our software and digital intelligence capabilities. More importantly, our innovation pipeline has expanded to more than 50 products under active development, covering areas such as propulsion systems, brake systems, converters, HVAC systems, digital intelligence, and EMS. As the CMD also mentioned, we are already seeing these capabilities translate into new opportunities, including our entry into next generation train sets and our first US orders. We are also strengthening the manufacturing side to complement this engineering capability. At our Satpur facility, we have increased traction transformer capacity by 20%, from 60 transformers per month to nearly 75 per month, enabling us to support growing demand while improving manufacturing capability. The Sinnar facility's flexible and efficient layout has capabilities across propulsion systems, battery chargers, traction motors, HVAC systems, and our specialized copper conductor facility. This combination of in-house engineering, manufacturing, and validation gives us greater control over product quality, localization, and time to market. Ultimately, we believe this engineering depth and technological superiority will be ARIC's strongest competitive advantages. We are confident that the investments we are making today in our engineers, R&D, and technology platforms will provide the foundation for ARIC's next phase of growth. I would now like to invite our new Executive Director and CFO to take things forward.
Thank you, Mr. Nayak. Good morning, everyone. Let me take you through the financial performance for the Q1 of FY27. Starting with the consolidated financial revenue from the operations grew 20.3% to 258.4 crore, supported by healthy underlying business momentum across the operations. The gross margin increased 32% on quarter to quarter to 73.2 crore versus 28.3%. Consolidated EBITDA stood at 13.2 crore, which grew by 45.4% year on year and increased 57% sequentially, with an EBITDA margin 5.4%. The consolidated margin was impacted by the ongoing integration and scale-up of the L1T plants, which resulted in higher employee and operating expenses along with increase in other operating costs. As highlighted earlier, we expect this year-term impact to continue for another 3 to 5 quarters as L1T progresses towards break-even, following which margins would improve at the business scale. Profit before exceptional item and tax stood at 8.1 crore, which also reflects a significant sequential improvement. PAT after minority interest stood at 9.4 crore, with the quarter includes the exceptional gain of 3.5 crore arising from the sale of Dehradun plant. Coming to the standalone performance, revenue from the operations grew 10.1% on YOY to 236.4 crore, driven by healthy execution across core railway business and sustained traction across key product segments. Gross profit increased 7.2% on YOY to 60.3 crore, while gross profit margin stood at 25.5%. The moderation in gross margin was primarily due to the higher raw material cost and increased input cost volatility due to the West Asia crisis. Despite the volatile operating environment and high raw material costs arising from the West Asia crisis, we were able to maintain healthy profitability with standalone EBITDA 25.1 crore, witnessing a growth of 3.2% year on YOY and EBITDA margin of 10.6%. Standalone PAT stood at 15.5 crore, registering a 17.8% on year-to-year growth. This is all from my side. I now open the floor for Q&A.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Subi Gupta with Trinetra Asset Managers. Please go ahead.
Thank you so much for the opportunity. So my question is that the capacity that we have put for the copper conductors, so I think 60-70% is for our own captive use and other we'll sort of sell. So how much is CTC and how much is enamel papers insulated copper conductors?
So, if I may answer this, the overall 350 metric ton capacity that we have installed, the CTC capacity is about 220, but this is expandable because we may not be using the entire 220 for ourselves immediately, but this is expandable. So rest of it is PICC and EPICC. EPICC has much higher capacity, more than 350 metric ton.
Okay, sir. And so how much do we expect, how much of our revenue share do we expect to get from this in coming years? Any range or idea on that?
At this point of time, we are focusing on more internal consumption. We have started taking few orders. This year will be primarily focusing on the internal consumption while we establish credentials for the external orders, with the external orders, primarily in the power sector.
Okay, sir. Thank you.
Thank you.
Thank you. Our next question comes from the line of Deepak Purswani with Swan Investments. Please go ahead.
Thank you for the opportunity, sir. So just wanted to check it out a couple of things. Firstly, on the propulsion system, for this year, if you can update us, how has been the railway tendering? I think every year in the month of July, there has been a tendering for the procurement of propulsion cars. So how we are placed at this point of time for these opportunities? If you can please update on that one.
So currently we have tenders which are in pipeline, which are in the processing stage, in the sense all production units have released tenders for propulsion units. Like our CMD mentioned that there has been a delay in the tender processing. This is moved to this quarter. So we expect some of these tenders to get finalized towards the end of this quarter. So to your question, yes, we have propulsion system order tenders in pipeline.
Okay. And secondly, on the metro and Vande Bharat trains, if you can please update on from the annual perspective, how are we seeing the tendering activity for these kind of businesses?
I'm sorry, can you please repeat?
So, what is the annual tendering for the this memo train or train set orders for the Vande Bharat and metro projects?
So, the memo tenders are primarily in the range of about 200 to 250 train sets in a year, which has already been tendered by all the three coach factories. Vande Metro is the first tender, as we have already mentioned. So that's all for this year. There are certain Vande Bharat and some other configuration of Vande Bharat that is in pipeline. But we are actively participating in wherever the train set tenders are currently being pursued. So whatever orders have come through are all part of this year's requirement.
Okay. And finally, if you can also give a sense about this IGBT converter opportunities for the mining segment, which we are looking out to explore at the US market, from the prototype stage to when we would be moving to the full-fledged product development, tendering activity, what kind of opportunity are there in the U.S. market for these kind of segment, and which are the other market which we can explore for this product?
So regarding the US converters, we are bound by very stringent NDA clauses, so we cannot really discuss too much about it. But we expect to ship the product within 6 months. And once it is shipped and they install it and it's commissioned and the performance is satisfactory, we can expect more orders. Today we cannot reveal the rating and we cannot reveal the configuration of this converter, but the opportunity within the US for this is tremendous, and we intend to use those credentials to then go into different segments, including India.
Sure. Thank you. Thank you for answering the question, and wish you all the best.
Thank you. Participants who wish to ask a question may press star and 1. Our next question comes from the line of Midun James with Mode PMS. Please go ahead.
Hi. Thanks for the opportunity. My question is regarding, so we are supplying, for example, we are supplying transformers, traction motors, converters, etc. And we are a development vendor for propulsion system. So how does it actually differ? I think in a propulsion system, you have all these components, if I'm not wrong. And where I'm coming from is that we recently came across a company which got listed called MV Electro Systems, which is claiming that they also have a full vendor approval for propulsion systems. So they and I understand Meda has also got that approval. So if railways tendering happens for a propulsion system, then what is the relevance for the standalone power electronics parts that we kind of supply? And if there is an opportunity for that, then what is I mean, how I'm not able to sort of figure out how does this play in the railway tendering system? If you can throw some color on that.
Yeah. So the terminology propulsion system, it differs from application to application. So when we talk about locomotive, the propulsion system constitutes primarily 4 products, which is your main traction converter, auxiliary converter, vehicle control unit, and the driver display unit. That's all that is a part of the propulsion system for locomotive. And the traction transformer, traction motor, HVAC system, brake system, everything else is bought separately. It's more like an a la carte sort of a situation. And when you move to train sets, and then the terminology changes, then the propulsion system means the main converter, the auxiliary converter, the train control management system, the driver display unit, the driver desk, and it also includes the transformers and the motors and all other electrics and electronics that go into the said train set. So that is the differentiating factor in terminology of both the different kinds of trains for Indian Railways. And regarding our competitors, yes, there are a handful of them who are competing with us in different segments and different categories. But I would not like to comment neither positively nor negatively about any of our competitors, peers, or rivals. So thank you.
Yeah. So I think that gives a little bit more clarity. So what you are essentially saying is that for a train set, then your opportunity for revenue improves significantly from the 3 to 4 crores, which was mentioned in the previous call. So that would be about 40-50 crores, if I'm not wrong. Am I right in that assumption?
No, the numbers are skewed. It is 5.5 crores for locomotive. It is 15 crores approximately for a memo motor coach, and approximately 60 crores for a train set.
Okay. Thank you. And one more on the same line. So, what would be the TAM for the propulsion system? So, if my ballpark numbers are right, I believe there are about 10,000 odd locomotives in the Indian railway system, and roughly about 1,500 locos get tendered every year. I don't know if the numbers are right, but what could be the TAM that we are looking at? Where I am coming from is basically our our guidance or our aspiration that we would be sort of a 1 billion revenue company in the next 4 to 5 years. I don't see that kind of a TAM from the railway propulsion systems per se, because if the numbers, whatever you're saying, and if my assumptions on the fresh rendering every year, then the TAM is significantly lower. Am I right, wrong? Can you give some clarity?
Yes, so there are two different things here. First is the ambitions that we have is not solely dependent or relying on Indian Railway Propulsion System. Indian Railway Propulsion System is a launch pad for us to get credentials and to get involved with many more applications and many more territories. So that is a separate question. Regarding the TAM, again, you have to break it up into different segments. If you talk about propulsion system for locomotives, yes, it is 1,500 annually, and then it is going to be tapered at 1,500, 1,200 more or less. But then the real increase of TAM is in the train sets, where Indian Railways has just sort of started their journey of migrating or transforming the rail network from locos and coaches to train sets. And that's where the real opportunity will come in the next couple of years.
Mr. Midun, could you please come back in the question queue for the question, sir?
Sure. Yeah, sure. Thanks.
Thank you, sir. The next question comes from the line of Nishita with Sapphire Capital. Please go ahead.
Being recorded.
Yes. Hello. Am I audible?
Yes, ma'am, you're audible.
Recorded.
Yeah. So I had a few questions. My first question is on the order book. You mentioned that a few of our orders were delayed. Can you quantify the orders that were delayed and which we are expecting in Q2?
No, we cannot quantify it because that would not be right for us today. But what I can tell you is that participated in, we are at very good positions, and it's a matter of time when the orders are placed. And it's not just us. It is Railways have not placed orders for all these components yet.
Okay, understood. So, by the end of FY27, what does our closing order book look like? If you can give some sort of guidance on that.
No, we cannot. Can we? Or no? No, it is.
Okay.
No, we cannot provide that today.
Okay, no problem. And I just wanted to understand that the current 5% EBITDA margins that we've done, is there any scope of the margins going lower, or are these the sustainable numbers for at least next 4-5 quarters?
EBITDA margin 5%.
Consolidated. See, the consolidated margins, as I mentioned in the speech also, consolidated margin is lower because we have them growing up in them our France entity, France of this. Standalone margins are much more around 10.8% of it. Yes, so it will take some time, maybe 3 to 4 quarters. It takes, okay. If you see the versus March to June, where we have done poor in the totality consolidated, it has been already improved. Okay. So that is maximum time we are just expecting it 3 to 5 years, 3 to 5 quarters it will improve all this.
Okay, so like in 4 to 5 quarters, we can expect Elevator France to be a bit breakeven, right?
Yes, correct, definitely.
Okay, understood. Yeah, thank you so much. That is it from me.
Thank you. Ladies and gentlemen, if you wish to ask a question to the management, you may press star and 1. The next question comes from the line of Ashish Soni, an individual investor. Please go ahead.
So regarding this Memo and Vande Bharat orders which we got, so who are our competitors and any margin profile for this orders if you can share? And this US order, is it some sort of like a trial order and it will ramp up after this trial order? Just give a color on that as well.
Yes, I've already covered this before. The US orders are prototypes, and once they are executed, we'll expect bulk orders. For the train set orders, our competition profile is the same as the propulsion system and other electronic products that we serve. It's all the same competitors. We cannot give any indication of the margin profile product-wise.
Okay. And in your opening commentary, you spoke about propulsion, I think 9,000 kilometers. So when do you think it can get completed and you can move from the development to the main vendor stage for the propulsion system for Indian Railways?
We expect the field trials to be completed in the next few months. However, at this point, it's perhaps more advantageous for us to stay in development because we are eligible for 20% of the tendered quantity, whereas there are about 6 or 7 different people in the approved source fighting for the balance 80%. So mathematically, it makes a little bit more sense to be where we are at this stage.
Okay. And in terms of your own margin profile for this MEMU, Vande Bharat and propulsion, which is the highest one for you? You don't need to give number, but at least from ranking perspective, which is the one which is having higher margins for you?
I think, obviously we have more clarity on the propulsion system because we are already into it, so that is obviously better. But MEMU and Vande Metro, we are still in the prototype stage, so we would not like to share more at this point of time.
Okay. And one last question about that 1 billion aspirations. When do you think strategy can come for the investors, like what you guys are thinking? Because it was discussed in last Concall as well as today also, but when is the strategy coming for investors to look at it?
No, the strategy is already in play. We will not make it public, that's for sure, but it's already in play because all of these things that are resulting into new orders is a part of that big aspirational ambition that we have. And you'll keep seeing different things happening throughout the year. And that's what we're working towards.
Okay, sir. Thanks and all the best.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question comes from the line of Huzair Lari with AUSAC Financial Advisory. Please go ahead. Mr. Huzair, we can't hear you. Could you please use your handset? No, sir, you're still not audible. Can you speak a bit louder or use your handset?
Hello, am I audible now?
Yes, sir. Perfect. Thank you.
So I have a question related to this propulsion system. So, like, what is the delivery payment structure? Suppose we get an order for a propulsion system. The delivery lies somewhere around 18 to 20 months, let's say. So what is the payment structure here? Is it milestone-based payment or will we get the complete payment after delivering the system?
After delivery.
Okay. And one more question, sir, like what is our strategy for this defense segment? Like what major products are we targeting? Any idea on that? And will it be like majorly are we targeting the domestic defense segment or we are looking for export also?
No, we are looking at multiple different avenues within defense locally at first in the range within power electronic sector. We don't know exactly what product it is, and we cannot disclose that, but it is within the existing core profile that we have.
Okay. That's all from my side. Thank you so much.
Thank you. The next question comes from the line of Sajal Raj with Zenflow Finance. Please go ahead.
Hi, sir. Am I audible? Hello.
Yes, you're audible.
Yeah. So, sir, I just wanted, if possible, can you give a guidance on the number of propulsion units that you will be able to produce in a year when the approval comes?
If you're talking about the locomotive propulsion system, we are geared up for about roughly 120 sets per annum, but we are staging the facility for further quantities as we scale up the numbers. So it's not an infrastructure issue at all. It is more about the numbers that the orders that we taken. So we don't see an issue with the production capacity.
Okay. Okay. Thank you.
Yes, Mr. Sajal, does that answer your question?
Yes, sir.
Okay. Thank you. Participants who wish to ask a question may press star and one. The next question comes from the line of Midun James with Mode PMS. Please go ahead.
Yeah, thanks for the follow-up. So, the question is regarding the development vendor status that we discussed now. So, are we the only development vendor currently for propulsion systems? As I understand, and a part of the question is that, as I understand, there are only two Indian origin full service vendors, and then there are other multinationals like Siemens, Alstom, ABB, etc. for propulsion systems. So, does the railway push for Atmanirbhar or indigenization for the propulsion systems? Are they given any specific weightages, the likes of MEDA and MB? And do we get the entire 20% development vendor quota in the tenders?
Yeah. So, answer to your first question, yes, we are the only development vendor for the propulsion system. In terms of a full in-house capability across all the systems, subsystems related to propulsion, yes. Apart from there is only another Indian source. Rest of them are multinationals, as you said. But there is, as far as preferential treatment, there is no preferential treatment. It is more about the performance. So, Indian Railways qualifies the vendors based on the quality and performance, reliability of the product, and not any specific preference.
Okay. But recently we came across a news item which says that which has put up certain conditions saying that the technology.
Sorry to interrupt, Mr. Midun. Could you please speak a bit louder?
Yeah. Am I clear now?
Yes, sir, you're clear.
Sorry. We recently came across a news item which says that the Indian Railways have put up certain conditions wherein which the technology has to be either it has to be 10 years old or it has to be within India, and there are multiple conditions like that. So does that disqualify some of the multinationals or companies which have sort of acquired technology from the multinationals to participate in these propulsion tenders?
Sir, I think as far as our current participation is concerned, tender qualification criteria follows the portal guidelines, and there is nothing that indicates that whatever you have just mentioned, this is not something which applies to our product range right now.
Sure. And does it benefit you in some way so that some of the current players are sort of weeded out because of that, or that is
the benefit is definitely in the in terms of the quality, reliability, and the design control that we have on the product. So because everything is homegrown, so we have 100% control on our technology, whereas few others may have to be dependent on external support. So that's the benefit.
Okay.
Yes. Sorry to interrupt, Mr. Midun. Could you please come back in the queue for further questions?
Sure. Yeah, sure.
Thank you. Our next question comes from the line of Garvit Goyal with Serene Alpha. Please go ahead.
Hello, am I audible, sir?
Yes, sir.
And thanks for the opportunity, sir. And my question on cost side, like quarter one management said, we protected from escalation clause on cost side. And in standalone financial statement, we see margin are little compared. So can you tell us that is there any freight charges and other costs, or there is any change in escalation clause area?
You see, the margins are maintained by us, but employees' cost has little increased. As we have mentioned in the initial months speech also, we have the big targets on us. So we have recruited the number of employees, but the benefit will be seen in the coming year. Okay. But you can say today we have more than approximately 200 employees in the R&D also. If you exclude, to analyze all this breakup of the cost, etc., if you exclude the increase in the employees' cost, we are done much better. So that's versus the Q4 also last year.
Okay. Means our escalation clause is the same, sir, as you mentioned, quarter.
Correct. Yeah, correct.
Yeah. Thanks.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question for today. I now hand the conference over to the management for closing comments.
I hope we have been able to address all your queries. Thank you everyone for joining the call today. It was a pleasure to speak with you, and we look forward to continuing our engagement soon. Thank you.
Thank you. On behalf of Hind Rectifier Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.